everyone. Welcome to Buy Now, Sell Now Weekend. I'm Mubina Kapasi.
Hi everyone, I'm Avan Dabash and we've got lots lined up today on the show. In fact, we will be talking about some individual stocks and of course answer portfolio queries as well on the show. So today we'll be discussing RBL Bank, SBI and Reliance Communications.
And in our portfolio segment this time around, we'll be discussing B.S. Rao's portfolio.
Time to get on board our guest, Jay Thakkar, Senior Technical Analyst. Shekhan is with us on the technical side. And we also have with us Avinash Gorakhshekhar, Head of Research, Moneylicious, to aid us through the fundamentals. Gentlemen, as always, it's a pleasure having you with us on the show. Time to start off by getting on board our viewer queries. Praveen Deshpande, first up, has sent us his email query from New Delhi. It's on RBL Bank. He says that he's bought 490 shares at a price of 361 per share. He now wants to know whether he should hold on or should he sell it out. Well, you know, you have RBL Bank, which has been in focus. It's, of course, a recent listing. We spoke to the management as well. In fact, some RBI comments on the note ban saying the FY17 GVA forecast will be about 7.1 to 7.6%. They cited loss of momentum as well by 50 basis points in the second quarter. And brokerages are advising that it's prudent to just about wait and watch as some developments will happen. So the outlook for GVA growth for 2016-17 is a bit uncertain. Well, RBL Bank this week has shaved off 4.5%. Let's find out, Avinash, what you make of it. Is it a good stock to have in the portfolio?
Yeah, Avan, I think looking at the kind of investment horizon the investor is looking at, I would presume that, this has been a recent listing. And more importantly, this is a bank which has got a fairly well diversified, product base. I would presume that FY18 should be a much stronger year. And I think the bank is confident that, they should be recording a 30 to 40% kind of loan book growth. Plus asset quality continues to remain quite, stable and, robust. So I would presume that if he has a 12 to 18 month horizon, he should hold on. I would definitely buy the stock on every decline and, would recommend that he should hold on. I mean, one could look at a target price of around 450 here. He should hold on. He should definitely get a better risk reward.
Okay, hold on for that one. Better risk-reward ratio is expected. In fact, 450 is the target that Avinash is looking out for. But meantime, Jay, come in on the technicals then at 336. Do you think that this one looks attractive? There is more upside potential for this one?
Well, as you rightly said that, this stock is recently listed and we don't have much of data. So yes, less of technical evidence or less of data, it would not be easy for me to comment on this as far as the long term is concerned. But yes, short term view is what looks on charts is whatever data available is. I think 322 is a very crucial support. Until that support holds on, it's not broken. I think the probability that this stock again reverses from these levels and, we can see some bounce coming to the levels of around 356 or, 364 as well going forward. But if 322 breaks, then I think whatever data we have technically on chart, I think it will then somehow reverse its higher top and higher bottom formations on charts, and then it would it will point to a reversal from up to down. So I think that's the crucial level to watch out for as far as whatever chart data is available.
Okay, consensus hold recommendation. Avinash believes the fundamentals seem intact, and RBL Bank, according to Jay, could see a stop loss below 320, off about 322. That's what he's advising. Moving right on, Praveen also has sent us his other email query on SBI. The stock is currently trading at about 249. He bought 490 shares at 275 rupees, and now he wants to know whether to hold or sell. It's a long time horizon of about the next 1 to 2 years. There was a recent preferential issue as well that we saw of SBI at about 269, where the government shareholding will rise to about 61%. So let's get in the view then on the fundamentals. SBI, Avinash, if we compare it to some of the other stocks within the PSU banking space, seems to be a little more resilient. Let's talk about the outlook over the next 1 to 2 years. What's the expectation by way of earnings or growth and valuations?
I think, Avan, if one were to take the next 12 to 24 months, I would presume that SBI definitely seems to be well positioned to actually ride the bull wave. And I would presume that, the third quarter and fourth quarter of FY17 would definitely be challenging. In terms of growth triggers, I would say FY18 definitely seems a much better year. our sense is that loan book growth as well as asset quality pressures should obviously start easing off clearly from the first or second quarter of FY18, and I think one could definitely expect a better performance FY18. I think over the next 12-18 months we have a target price of 330, so he should hold on. I think he should not be discouraged by the fact that the price has gone below his cost price, but definitely longer term risk reward is good.
Okay, positive view coming in. Q3, Q4 of course will be painful, but that I think is widely discounted by the market. But FY18 of course will be positive. Hold on, long-term time horizon is what Avinash is recommending. Jay, come in then on SBI, 249 rupees is where it's currently perched at. And yes, like the rest of the market, like the rest of the PSU banking space, we did see SBI as well come under significant pressure. So what would you advise him to do?
Absolutely, See, first I, talk about the, the medium to long term view of mine on SBI. Well, this stock definitely looks positive from the point of view of long term. But, what it's very clear on the charts is that, this stock has been trading within a range of 150 on the lower side to 330 on the upside since 2010 now. So it's almost been 6 to 7 years now that SBI is trading within the range of 330 on the upside and 150 on the lower side. So it's a no-brainer as far as the trading range is concerned. But then the crucial point is that whether one should really hold on to this stock in anticipation that this range will provide a breakout on the upside. I think the possibility of that is quite high if someone has a long time horizon of around 7.5 to 2 years. The reason for that is the recent rise which we have seen from 150 until the recent high levels, I think has been a clear impulse on the upside. There's a 5-wave rising structure. Generally, up to 5-wave rising structure, we see some correction coming down around to say 50 to 61% retracement of the entire rise, following which we again see a 5-wave move on the upside. So if I calculate the retracement, so in the short term is looking weak. It can slide till the levels of say around 247 or maybe even to the levels of 202. So that's the levels it can come down to. 218 to 202 are the levels to watch out for in the short term. So if someone is holding this from a trading perspective of 2 or 3 months, then I think one is at a risk of this stock going back to 218 to 202. But suppose if it settles at around those levels and again start its next 5-wave up, then the minimum target I would say would be around 400 to 420. So that definitely means that this 6 to 7 years of range going forward will be broken on the upside. So for the long term investors, I would say hold on to this stock. If you see some dip around 218 to 202, add this stock in your portfolio. But if you have a trading angle of around say 2-3 months, then this is the point this is a time to exit.
Okay, I think more or less technically as well, Jay is advising that you can hold on to it if you have a long-term time horizon, which our investor does have. So consensus call on the fundamentals as well as technical is a hold, and in fact, you can add in some more at lower levels. Now, our last email query is from K. Chaudhary, and in fact, he's writing in all the way from Dubai. He says he has 1,000 shares of Reliance Communications purchased at 79 rupees per share, and he wants to know whether he must hold or sell. And well, that one's certainly been in the news last week. Its tower deal is finally done. It has signed binding agreements with, in fact, Brookfield Infra, and it is going to receive 11,000 crore rupees cash in upfront payments, which is of course going to go a long way in really paring down the kind of mammoth debt that Reliance Communication has in fact on its books. And that's the reason why, while of course the rest of the markets were in carnage mode, we did see Reliance Communications put in a bit of a stellar performance in the middle of the week. So Avinash, come in then on Reliance Communications. How far do you think this deal will go in really paring down debt in terms of boosting the financials of the company, and otherwise as well, what's the outlook?
No, I think Rubina, definitely the debt will definitely get reduced. I think the deal with Brookfield has actually been signed for an amount of 11,000 crores. And my sense is that, to a certain extent, debt definitely gets reduced. But I think the debt, even as of now, seems to be quite significant. It roughly is around 42,000 crores. But the core business is going to be under significant pressure. This kind of debt reduction is just a small, kind of contribution to the overall, business. And our sense is that over the next 2-3 quarters, in fact, for FY18, I would not be surprised that margin pressure is going to be extremely significant. And it may not be possible for Reliance to actually outperform the other peers in the industry. If one were to compare it with Reliance Jio or Bharti Airtel, in fact, the telecom space is going to be extremely competitive. So I would believe that, rather than holding on, he should exit out. I would prefer that, getting into stocks like, say, NBCC at the current level would be a more safer strategy, where I would believe that, the risk reward would be definitely be pretty attractive over the next 1 to 2 years. if he has that kind of time horizon in mind.
So it's not looking very encouraging according to Avinash when it comes to the fundamentals. So much competitive intensity. Even when it reduces its debt burden, there's still a lot of issues. So NBCC is a preferred option. Jay, is this a view that you would concur with? Because a lot of analysts have been writing off the telecom space of late. What's the advice that you have?
Well, I share the common view. In my sense, I think that yes, telecom space is still not looking good on charts as well. Most of these stocks like RCom, you say, or maybe Idea or Bharti, which looks very bearish from these levels as well. I'm expecting around 220 to 30 levels on Bharti as well. And RCom is not showing any signs of reversal. It's just forming lower tops and low bottoms. So technically, there is no such evidence that I can say that yes, the probability of these stocks getting bottomed out is quite high. So I would say that yes, avoid this space entirely, telecom, and even I think that one should exit from these stock and get into some better stock which is into good momentum or is likely to be into momentum going forward, say in 6 to 12 months. And last time, as far as I remember, when I had discussed on BNSN Weekend, I had recommended few of the IT stocks and the entire sector as well, and I said that the probability of this sector getting bottomed out is quite high, and from those levels we have seen a decent bounce coming in most of the IT stocks. So I think yes, one can exit from these and get into Mindtree, which I think is quite likely to get double from these levels if someone has a time horizon of say minimum 1 year.
Okay, I think it's a consensus, sell call coming in from both of our experts. Let's just slip into a short break, but when we come back, we'll be discussing B.S. Rao's portfolio, so don't go anywhere.
Hi there, welcome back. This is Buy Now Sell Now Weekend.
Okay, and let's just go across to our portfolio segment. And today on the show, we'll be discussing B.S. Rao's portfolio. Let's just quickly tell you a little bit about him. He's 66 years of age and he's currently employed and he is located in time horizon in Hyderabad. He has a fairly long-term time horizon of almost about 2 years. So let's tell you all of the stocks that have found a place in his portfolio. First up, from the auto space, it's M&M. He's bought about 71 shares of that one, purchased at 1,345 rupees. WAPCO India as well, a small cap company, purchased at 6,912 rupees. L&T, fairly high price for that one, 1,732 rupees. Moving on, in the consumption space, we have Asian Paints bought at 879, Titan about 127 shares at 359 rupees, and then there's Indraprastha Gas Limited at 490 rupees. Then a couple of NBFC names as well. There's Max Financial bought at 516 rupees, 190 shares of that one. Shri Ram City at 2,309 rupees. And lastly, a small cap company, Tube Investments, bought at 536 rupees per share. So let's just take you one by one through all of the chops and changes that our fundamental expert Avinash Gorakhshekar will recommend for all of the stocks in his portfolio. And first up, there's M&M, wherein he's losing some bit of money, almost about 200 rupees a piece is what he's losing at this point of time. WAPCO India at 6,912, where once again he is losing money. And there's lastly L&T as well, 1,732 rupees. Avinash, take us through what exactly would you recommend him to do for these three stocks?
No, I think as far as Mahindra & Mahindra is concerned, I would believe that if he can hold for the next 12 to 15 months, this is a very strong agri as well as a domestic urban kind of story, and I think the tractor market is definitely in a good shape. So I would believe that if he can hold on for the next 12 to 15 months, he could get a target price of at least 1,600. So he should hold on. As far as WAPCO is concerned, I would believe that WAPCO could possibly face a certain bit of competitive pressure because they're largely present in basically the commercial vehicle space where they basically make the air suspension bags. I would believe that a better choice could be Maruti at the current level. The investment horizon he's mentioned is next 1 to 2 years. So Maruti could be a good pick where you could get a target price of around 6,000 rupees. And the third stock, that is Larsen & Toubro, I would believe that this is also a long-term infra story. A lot of business is not only on the capital goods but even on the defense side. So here he could hold on for the next 12 to 18 months. He could get a target price of around 1800. So he should hold on. I would presume that L&T definitely seems to be a good play for the long term.
Okay, those are some recommendations coming in from Avinash. It's a hold on M&M and L&T as well. But you may consider replacing WAPCO India with another large cap auto stock, Maruti, and some targets that you're watching out for, that's appearing on your screens. Moving on to the next three stocks, Asian Paints, once again a large cap company, purchased at a price of 879 rupees. And I must say he's bought it on a good price, because we have seen the stock rally to about 1200 levels and of course has slipped back once again to the 870 odd levels thereabout. Titan at 359, and lastly IGL at 490 rupees. Avinash, what would you advise him to do?
No, I think as far as Asian Paints is concerned, I think he should hold on. This is one of the frontline paint companies, and after a bit of hiccups after the demonetization, I think the management has also clearly mentioned that sales have got back to normal, and we believe that FY18 should be a decent year. Not only the paint volume should go up, but the GST benefit should also come in. So I would believe that he should hold on. The time horizon of 12 to 15 months, if he holds, he should get a target price of around 1200. As far as the second stock, that is Titan, is concerned, I think Titan is definitely going to face negative headwinds at least for the next 2 to 3 quarters, and clearly discretionary spending has taken a big backseat. So I would believe that here, if he can possibly get into some financial service stocks like Edelweiss. Edelweiss, we believe that has started moving up pretty smartly in this kind of challenging market, and here if one were to look at the next 12 to 15 months, he could get a target price of around 140. As far as Indraprastha Gas is concerned, again a very well established player in the CNG market, and as far as prices are concerned, I think with crude prices going up, we will probably see CNG prices also moving up. Plus the kind of volume growth is also going to be quite good in the coming year. So here he can hold on for the next 12-15 months. He could look at a target price of around 1200 here.
Edelweiss instead of Titan, but otherwise Asian Paints and IGL get a thumbs up. Let's get in views then on Max Financial. What's the view at 516? Shriram City, is it a good investment? And from the mid-cap pocket, Tube Investments at 536, he's making some money here. What do you reckon, Avinash?
Yeah, I think as far as Max Financial is concerned, now it's a focus play only on the insurance business. And our sense is that, I think after the IPO of Prudential, ICICI Pru, I mean, clearly markets are looking at some sort of better valuation for pure insurance companies. And I think if one were to look at the longer term potential, one could definitely expect a decent kind of headroom here. I would believe that, a target price of around 620, 650 is possible. As far as Shriram City is concerned, again, they operate in the replacement CV market. They are a large NBFC player. So maybe in the short term, the headwinds would be negative. But if one were to take a longer term view over the next 12-18 months, this is definitely a well established pan-India player. One could look at a target price of around 2500 here. So clearly one should hold on here. And as far as Tube Investments is concerned, they have announced a demerger of the insurance as well as the manufacturing business. And clearly in terms of value unlocking as well as the overall business, I would believe that, if one were to hold for the next 12-18 months, one could get a combined, target price of around 700 for both the businesses.
Okay, I think all three of them do get a thumbs up from Avinash. Mr. Rao, I hope you've taken note of all of those recommendations coming in from Avinash, and do keep them sending in. But do remember that this portfolio recommended here is only a model portfolio, and please do consult your individual investment advisor before taking any investment decisions. Time to slip into a short break. When we come back, we'll get you some top technical recommendations as well as wealth creation ideas.
Welcome back. This is Buy Now, Sell Now. Disastrous weeks with the equity market. So what is it that you should watch out for by way of individual stocks? Jay, run us through your top picks.
Sure. Well, on the buy side, I have M&M Finance, wherein I think the recent fall has been very impulsive, and that is a 5-wave declining structure. Post that, what I've also seen is in the 5th wave we have observed a good ending diagonal pattern form, which generally means that the short-term trend is likely to reverse. And ending diagonal itself says that something has ended on the lower side or the upside. So I think here with the 5-wave declining structure, we have seen that the downside is now capped, at least as far as the short term is concerned. Now along with that, we have also seen a good double bottom that's been formed with a good positive divergence in its momentum indicators on the daily charts. These both things rather increases the probability on the upside of a bounce at least. So minimum target which we are looking out for M&M Finance on the upside comes to around 271 initially, and thereafter 280. One can maintain a stop loss at 247 and buy this. The second buy recommendation we have is on JM Financial. Now this stock has formed a clear 5-wave rising structure, post which we saw this stock correcting by around 50% of the entire 5-wave rising structure, and that too in a downward sloping channel. This week we have seen this stock in fact providing a breakout about this downward sloping channel with a buy crossover in its momentum indicators. The minimum target which I am looking out on the upside comes to around 74, so one can buy this with a stop loss of 63.50. Finally, I have one sell call which is on Vedanta, which I think is quite likely to provide a monthly negative close going forward in this month, and that's going to be after a straight 10 months of positive close. Now the recent fall which we have been seeing in Vedanta is a clear 5-wave declining structure that again says that the probability of this stock might have topped out is quite high. With a 5-wave declining structure, there can be some bounce back coming in, but that should be utilized for a selling opportunity only. And I think the minimum target which I am looking out going forward comes to around 190, so one can sell this with a stop loss of 224.
Okay, M&M Financial, JM Financial are buy calls, but Vedanta, that one does look weak on the chart, so it's a sell call coming in from Jay. But time for some wealth creation ideas for some investors who have more of a long-term time horizon. Avinash, take us through what exactly makes it to your list.
Yeah, I think the first stock I would recommend is a company called Sterlite Technologies. We believe that Sterlite Technologies is a very dominant player in the optic fiber space, and has got huge economies of scale, and clearly the kind of product they deal in. Our sense is that over the next 12 to 18 months, the company will definitely get a very solid order book, considering the fact that data consumption has now started increasing, and the government has been focusing on several projects like smart cities or typically the rural broadband kind of projects, which is obviously going to help optic fiber penetration increase further. The company is also a very largely a global player. They are a large player in the Chinese markets. In fact, in the domestic market, they enjoy a market share of more than 40% in the optic fiber. And what is noteworthy is that they are an integrated player. So they make the optic fiber right from the silica, and which actually helps them retain the maximum value addition for them. In terms of financials, our sense is that this year is going to be a strong consolidation year. The company has an order book of almost 2,200 crores. And clearly, we could see earnings of almost 5 to 6 rupees this year, and in FY18, probably 9 to 10 rupees could be the earnings. I think clearly the positioning of this company is very strong, and demonetization is not going to impact it. We have a target price of around 135 here over the next 12 months. The second stock, what we are recommending is a mid-cap leisure hospitality company called the Bike Hospitality. Now here recently we met the management, and the management was very forthcoming in saying that clearly they are a mid-size hotel where they take most of the hotels on lease. So their their business model is extremely asset light, and that is what helps them generate a very strong return on equity and a return on capital employed, which is in excess of almost 30% odd. Plus the market, plus the business is very profitable. They operate at 24-25% EBITDA margins. Another interesting business which they are in is the time charter business, where they actually buy mid-size hotel rooms across pan India during the off season and sell it during the peak season, and which is extremely profitable. Now this kind of business model has not been tried out by any hotel other company, and clearly this has been tried out by them for the last 3 to 4 years. It has been working out well. Our sense is that over the next 6 to 12 months, gradually the markets could possibly recognize the potential of this company and its business model, which is quite differentiated. So here, investors should take a longer term call over the next 12 to 15 months. We believe that earnings growth could be definitely very attractive, around 20-25%. And therefore, we believe that, the stock looks attractive. We have a target price of around 220 here.
Okay, there you have it. Those are some top ideas to watch out for on the technicals and the fundamentals. Jay and Avinash, thanks for joining in on the show. And with that, we wrap it up right here on Buy Now, Sell Now Weekend. Thanks for watching. Have a Merry Christmas and a great weekend.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.